Well, hello everyone. Welcome to Trading a Smaller Account. My name is Barbara Armstrong. I'm a coach with Charles Schwab and delighted that you are joining me here today. I took a few days off. I was in New York City doing all things theater and Manhattan and, all of that good stuff. I wasn't looking at the markets, but it's hard not to be amazed by what went on while I was away. And as I started getting back up to speed on my flight home last night, some words came to mind. One is, fear and loathing. I think there was a movie at one point, Fear and Loathing in Las Vegas, and I don't think I've ever seen it. I'm not recommending it, but we've got to be careful when we see these extraordinary moves that we don't get on that FOMO bandwagon and become afraid that we are missing out, that we don't, but also we don't want to sit paralyzed in fear and miss opportunities that we might understand or have an ability to take advantage of. And so I go back to this trading psychology time and again, because in times like this, it's really important. And I want you to perhaps write this down if you're a note taker. And if you are a note taker like me, I would have written it down in all caps and put a circle around it and maybe some little arrows towards it. But what I want to say as we are kicking this off is the trend is your friend, until it ends. And I mean, we can get into, more details on that, but this is kind of my, going to be like the theme for the day. And just I'm warming up my drawing tools after having been gone for a few days. The trend is your friend. And I mean, and there can be, caveats to that, but, and then, like I said, if you're, on the nerd alert, like I am, you may have, put, this was me, when I first started in this world, of trading, when there was something that I really wanted to be sure I remembered, I'd circle it and, so this is one of the things that I want to focus on today is looking at trend, both shorter term and longer term, and trying to go with the flow of the market. And you might say, are you insane? Like, how do we know what the trend of the market is? And so that is going to be our conversation today. Just let me make my chat a little more current. I want to invite you. We have Mike Fairborn with us in the chat today. He's a friend and a fellow coach and understands all these topics that we're talking about today. His Twitter handle, Mike Fairborn CS. He's posting some great content over there. And if you aren't, checking it out, then you're missing it. Mine is Barb Armstrong CS. So, consider this your formal invitation. And all I can say is be there, be square. We do a lot of options trades in this trading a smaller account class. Know that options carry a high level of risk and aren't suitable for all investors. We use the Paper Money software application on the Thinkorswim desktop platform. Say that 3 times fast, but it is a brilliant place to learn and hone your trading skills and make sure you understand what you're doing with respect to trading strategies and trading plans and understanding the platform before you consider trading in your life account. There are some nuances and differences. The most significant one for us is that short options will never be assigned early in Paper Money. That can happen in a live account. Okay, so we're going to have a quick look at the markets just because today I kind of can't help myself, and then we are going to play some new example trades on the Thinkorswim platform. We're going to do a little bit of trade management today also. Okay, so let's go out and have a look at, what's happening in the markets. And one of the things that was pointed out in the chat before the class started, just let me scroll up, by Carol. We were talking about confusion and it's hard to trade when you're confused. The confused mind tends to say no, right? and the VIX, when we look at it and we think like, oh, wow, it was up at 60. It was up at 60, my friends. Like, here's a 1-year chart. How often has it been up at 60 in the last year? It hasn't. Let's go to a 2-year chart. Yeah, still nothing. How about we go to a 5-year chart? So, on one day, and I think this candle was a bit of an anomaly, like this is, in the last 5 years, basically unprecedented territory. So this says there's a lot of angst and fear in the market. And so, we still find ourselves with a lot of uncertainty. And so what do we do with that? Well, if we have a trading plan for the types of trading strategies that a trader might feel comfortable trading, when we look at volatility still being in the nosebleed section, in spite of the fact that it has come down by, almost 100%, like from 60 to 34 is a big move. But if we look at this, just in case we were thinking things were calming down, here's a 1-day, 1-minute chart. So here's today. And so it came all the way down to 30, it's on the rise again. So we're seeing even within our day a tremendous amount of, like a 4-point move. That's over 10% within the context of the trading day so far. And so what do we do with that? So, and I'm not just saying this like theoretically, what do we do with that? Do we want to be buyers or sellers? Oh yeah, sorry guys. I came over to look at, we had done a short, we had sold a put on Costco and, last week before I left and that has 73% of its max gain. So I was trying to figure out what class we did that in so I could go back. So let's go over to our trading a smaller account. There we are. Okay, so you are right. I don't know why I came back. Oh, here, yeah, because I wanted to look at a comment. But, we want to be sellers, right? Because the premiums are still high. And that isn't to say like thou shalt not buy or do a net buying strategy like a long vertical. That still might be a possibility. But when we kind of look at where volatility is, it's still up in the nosebleed section. We might be more prone to thinking about selling. And so what might that look like? Well, it could look like a short call vertical, or if we're bullish, a short put vertical. Now, if we come and we look at the S&P 500, what is, the intermediate term trend? And I, would say here since February 19th. So, we're almost 2 months in since we hit this high. And one could say we went from kind of going sideways from kind of December through February, and then we broke through that support level around here-ish. And, still we're above the 10-day moving average. We're still not above the 30. And if we were to add, say, 100 to this, and we're just going to type here, simple moving average, and add that. So when we add this, the default is 9. So we're going to come in and edit that and make this 100. And we're going to make it a little bit wider. And I usually make this one black. And I don't tend to say, oh, today I'm feeling like green. I just about had a heart attack one day. I was a guest on a show. And I was in a hurry and hadn't changed the color of my line, and I had misinterpreted what the timing on it was. It was like, so, and why do I make this 30 red? Because the first coach that I followed on a regular basis made his 30-day moving average red. So nothing too, complex there, but, we're still well below the 100. And then when we look at today's candle, and if you say, well, my candle doesn't look quite the same, The reason my candle looks like this is because on appearance, I use candle trend. Because if I made this just a regular candle, today it would look like it was a down day, and yet we're still up, not a lot, but we're up, 0.2%. And so I like it kind of to show the relationship between the previous day's candle. But when it's dark green, it means it opened higher and it's currently pulling back, although we're still up compared to where we were in the previous trading day, which, in our case was Friday. So that's why I use candle trend, and that's just a personal preference. You as a trader can do whatever you like, but if you're wondering, why my candle looks like this instead of red, if it's red on your chart, this is why. And when I look back, when I was in New York, I did not look at charts for 3 or 4 days. So, when you see this big down day, big up day, down day, up day, currently kind of an up down day, and I look at this and I think, she loves me not, she loves me not, she loves me. Like, what are we continuing to be sponsored by the American Chiropractic Association because of all the whiplash victims out there? And I say that kind of tongue in cheek, but really it's disconcerting, right? So this is challenging. This is just making this challenging. And whether we look at the S&P 500 or the NASDAQ, and the NASDAQ, from this high here, where are we? And this one, I didn't forget to change it back. We are now in negative territory on the NASDAQ for today. But, we have, from hitting a new all-time high back on February 19th, we're down 16%. At one point, we were down 25%, like, holy smokes, Batman. So this trend since February, so the short-term trend is still downtrending. Whether we look at the S&P or the NASDAQ, if we look at the Russell, more of the same. I mean, that's playing kiss and tell with the 10-day. It's still like a stretch to get to the 30, and, you're waving with binoculars to see the 100 from where we are. Year to date down 17%, the NASDAQ down 12, the S&P down 9, and the Dow is the best performer. But, you look at this, from here to here, this is not an uptrend. So, the intermediate term, which is what we tend to focus on in this class, is still downtrending. And so we may want to look at bearish opportunities or things that are at least kind of sort of bearish. And when I look at these 3 charts, I think the most bearish one is the NASDAQ. And so, I get asked all the time, like, well, how do you pick the examples? So I haven't looked at the market since Tuesday of last week. So when I say short-term trend, Andy, I would say that's, days to weeks. I'd say intermediate is weeks to months. And I'd say longer term trend is months to years. Yeah. So Dow has 30. The Dow 30 has, it has 30 stocks, and it's different from the NASDAQ and the S&P in that the weighting or the impact that the stocks in the Dow have on that index are based on the price of the stock, not the market cap of the stock. And like the Magnificent Seven, they have not been crushing it. The Apples, the Amazons, the Teslas, the NVIDIAs. Like, we look at NVIDIA, and so here was one. What do you see since January 7th? If I'm playing I Spy with my little eye, I'm seeing high, lower high, lower high, lower high, lower high. Lower low, low, lower low, low. This is a downtrend. I'm seeing a downtrend here. And so the Dow is, it's a little bit of an anomaly in that way, but let's just start clicking through. So I mean, we've had this since it hit 260 at the end of December. This has come down to 169, which isn't insignificant. And today, this green candle means it opened here at 211, and it's gone down to 201. That's a 5% move within the context of the day, and it's still up by 2.3%. But at one point, it was up, significantly more. And if you look at that and saying, I don't quite know what to do with that. And that's okay. You don't have to know what to do with that. You can just say, this one isn't speaking to me right now. And we've got earnings, coming up at the end of the month. So Airbnb, we've gone from 163 down to 99. Wow, that's a lot of pain. And, and we do have earnings coming up. That one is May 7th. And if we were still, I'm not quite sure why I have this line here, but I usually don't just draw lines higgledy-piggledy. Okay, so this was a support level. And it doesn't really look like that is now holding as a support level, does it? But, if we wanted, could we look at Airbnb and come up and say, could we, with volatility being where it is, so could this end up being a new ceiling? This actually wasn't one of the ones on my list. But could we maybe come up and sell something around the 120? Now, we want to avoid, so I'm writing this down, Airbnb, earnings is when? So if we hover over this, earnings is May 7th. So we'd want to be out before May 7th, but could we sell like the 119, 120-ish? Given that we have this bearish engulfing pattern on the chart. And by bearish engulfing, and here we had this Harami pattern, right? So we had big bullish day, then we had an inside day, then we have this, I still think of this as a hammer. I think their technical word for it is shooting star? But we have this candle indicating that, this could be bumping its head up against a resistance level. And now today we have a bearish engulfing pattern, but it's been kind of hanging out around this previous support. Could this be a new ceiling? So could we come to the trade tab and come out to maybe this 120? We want to be out before when? Before earnings on the 7th. So this is only 18 days. Could we get enough premium? So, our checklist, if we look at the example trading plan and the trade management mini session collection, does it trade more than 1 million shares a day? Check. Do we have a tight bid-ask spread? Oops. 277 to 360, that's almost $1. That's got to be like 30%. And so we look at that and go, well, no cigar. That you could drive a truck through that. And so it may look like it has potential on the chart, but it violates one of the rules we don't want to violate, which is, bid-ask spread, 10%. We don't want it to be more than 10%. Now, if it was like 12% or a penny or two over, but this is 30%. So it's like, well, don't care if that's an opportunity. I have a strong posture and I'm confident with what my rules are, and I am not going to break that rule. Okay, so we're going to move on. And so when we look at Adobe, again, we have an earnings thing out here. That's not till June. So like that's way gone. We're looking for something in that 20 to 50 day range. And if we're being kind of sort of bearish or saying like, hey, if things consolidate, could we, with volatility being high, maybe come up here around 377 or 375 maybe, and we had a high here, and then we had, similar to the last one, right? We had a harami saying, hey, this could be a bear flag, and this rally may be complete. Then we have this, candle of indecision. And then now, could that be saying, well, this is support, it's going to go up. And then today we've got, another, and this is a live candle, it could change, but another kind of bearish candle. So could we sell something above this kind of 365? And how far above could we sell and get enough premium for it to be worth our while? So if we said, okay, we're looking to come out 20 to 50 days. So if we look at this 25 days, oops, don't know how I did that. Could we come out to 375? And again, do we trade more than 1 million shares a day? Check. What's the bid-ask spread look like? It's like 80 cents. Like, seriously, people? I'm gnashing my teeth. It's like, yeah, that's too wide. We want it to be like 40 cents or less, and it's $1.20. Well, that's not going to work. Well, how about if I came out to the monthlies, because earnings isn't till June, and did 32 days? We've got thousands of contracts here, say at the 375. Well, this is better. This is 40 cents on a $5 option. So that's under 10%. And we've got 1,800 and 2,100 contracts. So could we sell the 375 and then buy the 380 to define our risk? It's $1.42 is what we'd be getting. So I'm just going to make this a bit smaller. So, and then the next rule is, are we getting at least 1% per day we're in the trade? So, just as a rule of thumb, if we're in it for 50 days, we'd want a 50% return on our risk. If we're in it for 25 days, we want at least a 25. So this keeps flipping around. But what we're going to do, we're going to do one. Why not more than one? Well, because we're risking $365, and to do 2 contracts, we'd be risking over $700. And that breaks a rule that we are not willing to play with, to that degree. So we're looking at, we aren't going to risk $700. If our max risk is supposed to be 500, so this is 20. Well, we're going to buy it back when it's worth about 30 cents. And these numbers keep jumping all over. So you can change your exit if you like. Confirm and send. We're going to put this in our short call vertical group. So the most we can theoretically lose is $343. The most we can theoretically make, $157. And we're saying, hey, if we can make 120, happy campers, base hit. And that isn't including the transaction fee of $1.30 to get in, and then another $1.30 to close out the trade. Buyer in the hole. So if we wanted to put this on our chart, we're at 375. So I'm just going to take that one off, and we're just going to edit this one and make it 375. And then we're going to call that our short call vertical at 375, 380. So we want this to stay below that. And it's a May 15th, I think, expiration. So we know how long we're planning on being in this. Was it May 15th? It was 25 days, I thought. So let's come back and look at it. So our working orders, May 16th. Okay, so now it's saying, hey, we don't want to pay you 157, we want to give you 135. So if we want to change that just to get that order filled, because the numbers have been all over the place, confirm and send. Our short call vertical group. Okay. If you lost me, hit refresh. And maybe if you could type that into the chat also, that would be great. Okay, so let's continue on. ADI. So, you know, today may appear like it's sponsored by the letter A, but look at how many A's there are. Like there's 26 letters in the alphabet, but there's probably what, 15, 10, 15 stocks that are part of the NASDAQ. And so, you know, when we look at ADI, and again, let's back things up to take a little longer term perspective. For the last 9 months, how would you characterize this trend? Well, it looked like it was starting to rise here, but it's kind of been in this downward trend. And then it broke below this support level, even within the downward trend it was in. It's down 16% year to date, which is kind of on par with what the NASDAQ in general is doing. And again, we've done this and we're seeing this all over the town. She loves me not. She loves me not. You know, and so if we're trying to say, okay, so VIX is high, let's take advantage of the fact that premiums are higher right now. We're heading into earnings season, and if we're trying to trade in a more risk-averse way, we might want to avoid having this type of trade over earnings. Some will do it as an earnings trade, and that's another type of strategy. You know, we might use the short call vertical strategy, but you have a different intention with it, might I say. Like this, we're just trying to take advantage of time decay. We'd want to be out before earnings, you know, and, you know, could we sell something up here around this 190-ish mark? It's trading at 177, so that would give us $13 worth of wiggle room. Well, let's come out and look. And earnings is May 21st, so we'd want to be out before that. So we could come out to this May 9th, maybe, and we wanted to do something maybe around that 190, maybe even 195. So if we look at 195, 255, 340, again, how wide is that? Well, almost a buck, 85 cents, too wide. How much volume do we have? That's another rule. So does it trade more than 1 million shares a day? Yeah. You know, so it's the 21st. Could we come out here to May 16th? So we could. And then could we look at this 195 again, 200? Do we have lots of volume here? Yes. Do we have a tighter bid-ask spread? Yes. So we may have liked this 25 days to expiration, but we didn't have enough volume and the bid-ask spreads weren't conducive to our rule set. This 20 cents, that's about a 5% bid-ask spread. Yeah. And so we are going to right-click, sell, look at selling a vertical. It will make it as small as it can, like it will go to the next closest strike. So we're looking at the 195 and the 200. Our probability of being in the money at expiration, 22%. So that, or 23%. So we have a 77% chance of this expiring worthless, but a 47% chance of it kissing that 195 sometime between now and expiration. So if it goes up, the reason I point this out is I don't want anybody to be having heart palpitations. You know, one, how do we avoid heart palpitations? One, we're trying to get out, you know, up as high as we can. We've got $18 worth of wiggle room with this. It could go up $18 and we have a high probability of success. But the other way we avoid heart palpitations is we don't risk more than we can afford to lose. So, you know, if we look at this and we say, okay, we're risking $380 for one contract, you want to do two? What's our max risk per trade? 500. So the answer is no. Are we going to negotiate with ourselves on that? No, because it's too high. Little win, base hit, don't be greedy. You know, there was an expression when I was a kid, don't be a greedy guts. You know, I don't know where it came from, but I think about that often in the world of trading. And so we are going to put in an exit at 80% of our max gain. So we're just going to take that 120 times 2, 240. So we're going to go to, 24 cents. When it's worth about 24 cents, we'd like to buy it back. And, if you want to do the math, 120 divided by 380 is what we're risking, $5 minus 120. That's a 32% return, potentially for a trade we'd be in for 32 days. So we're just kind of squeaking through, it's meeting our rules. And we're going to make this good till canceled, confirm and send, put this in our short call vertical group. And so I say this is kind of sort of bearish. And why do I say that? Because, it could consolidate and go sideways. It also, this is giving it enough room to go up from the current price by $15, and we would still have a trade that could be successful. If volatility drops, that will help our trade. And I'm not suggesting that volatility is going to drop, but it is, it is at levels that we have seldom seen in the last couple of years. And so again, if you wanted to put that on your chart, it was 195 and 200, I think. So just get somewhere close. So this is our price line. And I always put the short vertical that I want it to stay below. 195, 200. I think that is the monthly as well. Yeah, May 16th. And say show on the right. Okay, just let me have a look at the comments. Thanks for getting to the juice of the trade. What is beta? So somebody asked what beta is, and so let's discuss that on the next one. So we've done talked about Airbnb, ADI. Yeah, let's just keep clicking along. ADP. So now this has been kind of uptrending, hasn't it? And then it kind of got stuck in the mud with all this, uncertainty globally with this, political. But I mean, this is up 3% year to date. What a little ray of sunshine. But when is earnings? April 30th. And is this going along with the trend of the general market? Not so much. And what's the date today? It's the 14th. So we'd want to be in and out if we were to do some type of short vertical. We'd want to be in and out. So we're a little too close to earnings for this one. But this is showing us that, there are pockets of sunshine, or modest sunshine. Now, what about Autodesk? Well, and I probably use this as an example in our technical analysis class because we had a pennant, and the idea was that if it broke below, out of this pennant pattern, that this might be a target. And look at that. It did end up going down to what that, potential target might have been. But it's now starting to rally. And, but it's not, it's flirting with the 30-day moving average. And, you might look at this and say, well, by the end of the day, this might not be above the 30-day moving average. And so you may want to just kind of exercise some patience here and see if it does come back down. And then you might want to have a swing target for it, or you could do a short call vertical. But with where it is right now, would you have a degree of confidence in looking at this that it's not going to move to the upside? And so with that, I might say, well, you know what? Patience, grasshopper. We don't have to do a trade on every stock we look at. We're looking for the ones that look interesting. And, here we had this kind of inverted head and shoulders pattern, and now it's come back to this support level like multiple times. And so if you wanted to take a walk on the bullish side of the tracks, which we haven't spent as much time on, might we consider, looking at AEP? Sorry, let me just get my mousing the way I want it to. It's come back, 1, 2, 3, 4, and then it came down a little and is rallying again, but then we have earnings. And so, could we sell something at this like 102, or maybe even could we sell the 100 and do a short put vertical if we wanted to do something that was more bullish? And this is up 15%. So this is outperforming this index that it is a part of by over 30% this year. But when we hover over this, when is earnings? May 6th. So we'd have to be out. Ooh, and this only trades monthly. So our option is something expiring in 3 days or after earnings. And if we're doing a short vertical, we don't want to trade it over earnings. And so with this one, we're kicked to the curb, this, opportunity for us is one we're choosing not to take advantage of because our example trading plan doesn't include trading this over earnings. And we don't have an option expiration available to us. So, we move on. So here's AMAT. Now, AMAT has earnings on the 15th. So if we look at this, how's it doing? Down 11% year to date. So it's outperforming the NASDAQ, which is kind of sad to say. But, when we look at the 100-day moving average, downtrending. We look at all these moving averages, they're all downtrending. And this is a 9-month chart. And so we've had a little rally here. Again, she loves me not. Do you see a trend here? She loves me not. But it's come up to this previous support level and looks like it may be having trouble. But do we have a close below the low of the high day yet? Say that 3 times fast. Like on the bullish side where we say we want it to close above the high of the low day, this we're looking for a close below the low of the high day. Now, we had a pretty extraordinary day here. So this was in this little run, the high day. So, your low would be way down here. But you might just say, well, I want to at least see it move halfway through this candle. That might be a potential entry. And so again, patience, grasshopper. But, and what we may want to do is just come out and look and say, hey, what does the premium look like on this? And the bid-ask spread, should we even bother to leave it on our chart? So again, AMAT was May 15th. So May 16th is after earnings. So even though we've got thousands of contracts, which looks delicious, the date, like look at the volatility. And I mean, the volatility on all of these is high, but we don't want something that expires after earnings. And why is that? Because volatility goes up as something approaches earnings. It doesn't tend to go down. And so then, if we look at something here, 685 to 710, well, and we'd want to be at, say, that 147 or above, say 148, 490 to 680, and we don't have any contracts. So 2 strikes. And it's not 3 strikes and you're out. Sometimes in the world of trading, it's 1 strike and you're out. Bid-ask spread you can drive a truck through, we're out. We're out. That's just the way we are choosing to play this game. And it's actually, it's not a game. Like the reason that you're spending time coming to webcasts like this, the reason that you are investing your personal time and resources to do this isn't because you're playing a game. It's because you are treating your trading like a business. Well, if you want it to pay you like a business. And so you have a business structure around it, which is called a trading plan and a set of rules. And fear is not part of that plan. And FOMO, not a part of the plan. Yeah. And hoping it'll go your way, that also is not part of the plan. So like here, let's bring these up. I've got this up here somewhere. Well, we can just bring up a new one too. So let's do that. So this is kind of where I break to say, hey, one of the things that we want to do here is subscribe to the channel if you haven't done that already. And what channel am I talking about? I'm talking about Trader Talks from Schwab Coaching on YouTube. And when you go to that, when you hit the default is to come up at home to the home tab, and it will show you whatever is currently playing or whatever is teed up to play next. If you come to playlists and we scroll down to, and these are now going to be turquoise for a while because I'm doing these mini sessions on candle patterns. Oh, it's a hanging man. We've got hanging man. We've got the first 4, and I have to be in town long enough to record some more of these. But if you come down here today, our trading examples were short call verticals. And so, this walks you through in 20 minutes an example and then a structure for an example trading plan. And you can customize this any way you like, but it kind of gives you a structure, and it goes through the what to buy, when to buy, this is a selling strategy, what to sell, when to sell, how much to sell, when to exit the position, and then routines. And so it just gives you a framework that you can then customize and make your own. Okay, so just as we wrap, one of the things that often comes up in the surveys is, can you at the end of the class just review what you did? And so, what we did is we had a lot of trades that looked interesting that we, either kicked to the curb and put on our wait and see list because either the bid-ask spread was too wide, we had earnings coming up, for whatever reason, it didn't meet our criteria for a short call vertical trade. But then we did place 2 example trades, Adobe and ADI. And this Palantir trade hit a target, and we exited. And that was a bullish trade that we had put on. But we did those 2 example trades today, and Palantir was a bullish trade that had hit a target. And with that one, I didn't follow the rules on that, and that it was a long call vertical. And obviously it must have been down, I would expect, by 50% at some point. But because I've been traveling so much, I didn't catch that. And we got out for a modest gain on that one. Okay, so hit the like button, hit subscribe. Don't forget to follow us in the Land of X, Barb Armstrong CS and Mike Fairborn CS. And that is a wrap for today. Up next is the fabulous Mr. James Boyd. And whenever he's talking, you want to be listening. There's lots of exciting stuff still to come today. So I hope you'll stick around and join us. Tomorrow I'll be teaching Getting Started with Technical Analysis. I hope you'll join us for that one too. Bye for now, everyone. Thanks to Mike and the guys behind the scenes for helping bring this webcast your way.